Good afternoon, this is Sean Golding with Golding & Golding, here to go through some of the common questions we get around whether failing to report income or accounts is criminal. I would say 99% of the time it is not. Most of the time, tax violations are civil in nature, not criminal. What does that mean? It means that the IRS can come after you for monetary fines and penalties and liens and levies and sometimes even seizures and written acts and all that kind of stuff, but it is not criminal, which means you will not be incarcerated, going to jail or prison as a result of not reporting this information, which is a lot of people's concern, right? They make a mistake on their taxes and suddenly they're in jail with Oz, right? It doesn't really work that way. Okay, there are some criminal violations. Some people do end up going to jail, but most of the time, missing a form or some income is not going to be a criminal violation that can land you in jail or prison. Okay, normally, criminal is going to be more complicated than that. It's not just I didn't file the FBAR. It's I didn't file the FBAR and I knew I was supposed to, and I had all these foreign accounts and I was shifting money from one to the next and structuring and smurfing accounts and money laundering, etc., etc. So let's go through some of the common, okay? If I miss the FBAR, will I go to jail? No, right? There are plenty of reasons why someone can miss the FBAR and it is non-willful. For example, a taxpayer may have several foreign accounts, but they're all pension. So the person didn't know that they were required to file the pension. They thought it was just bank accounts, so they didn't report it. That's not going to be criminal. Or a person may have 20 different accounts, but each of the accounts is under $10,000, so they didn't know its annual aggregate total of all the accounts, not $10,000 per account. Those are examples of presumably non-willful. I mean, you have to look at the facts and circumstances of each person's background, but typically that's non-willful. But let's say there's another taxpayer who knows they're supposed to file the FBAR and they don't want to file the FBAR, so they shift accounts around and they do fraudulent conveyances and they're trying to launder money and then take it back to the U.S. and not report it on their tax return. Missing the FBAR is just one cog in the wheel, right? It's not the only issue. So in and of itself, just missing an FBAR typically is not criminal, resulting in going to jail, but if you miss the FBAR in conjunction with other issues, it could lead you down a dark path. Is quiet disclosure a crime? Well, first thing you have to look at is whether it's intentional or unintentional. Unintentional quiet disclosure. A taxpayer is a new U.S. person. He's been here for a few years. He's a green card holder. Or he started as an H-1B, right? Then he became green card, started doing research, and thought, oh, wow, I was supposed to report these foreign accounts I have. So they start reporting the foreign accounts going forward because they didn't know they were supposed to go back and fix those first. Unintentional, non-willful, and fixable. Let's say a different situation where a person, let's make it, okay. So let's say in prior years they knew they were supposed to file the FBAR and they didn't. So they're willful for that time. And then they know about all the different programs, streamlined delinquency, voluntary disclosure, but they decide, you know what, I'm not going to do any of it. I'm never going to get caught and I'm just going to file forward. I'm sure there are people who have done that and they've been fine, but from a technical standpoint, that would be considered willful. It could potentially leak over into criminal. Could be considered fraud, right? Knowingly trying to do that, the IRS could say that was criminal, and that could land prosecution and could result in someone going to jail or prison. Are all willful violations criminal? No. You could be civil willful, but not criminal willful. Remembering, if something is civil, it's typically like a preponderance of the evidence, which if you wanted to quantify is plus or minus 50%, right? A little more than 50%, 51%. If something is beyond a reasonable doubt that's criminal, then it's more like 90 to 95% if you wanted to quantify it. So you could have a civil violation where a person was reckless disregard. IRS thinks, you probably could have filed it, but you didn't. We don't think it's criminal, but it's civil and it's willful, and so we're going to hit you with the 50% willful penalty. A lot more is required. If they want to push it to the criminal, then you have to get the IRS Special Agents involved, and then it has to be referred, and then it could possibly be prosecuted. So all willful violations are not criminal. With unreported income, it's a little different because there's plenty of valid reasons why a person would not report foreign income, okay? Let's say a person has income in a foreign country, they're tax compliant in that country, they pay all of their taxes on the income, they just didn't know they also had to report it in the U.S., even if it's a lot of money. They've paid tax there, so that's typically going to be non-willful. Or they could have money in a country that doesn't tax that category of income. For example, they might be in a country where dividends and interest and capital gains are not taxable, which is common in certain Asian countries. And so they come to the US and they didn't know that this was reportable. Well, there could be a significant amount of income that's not going to make it willful criminal. Okay. If a person knows that the income is reported on their US tax return, they have a CPA, the CPA says, oh, you know that income that you earn overseas, if you have any of it, let me know and I'm going to report it. That person goes, yeah, I don't want to I don't want to report it. I'm not going to tell the CPA. They know it's reportable. They know it's supposed to be on the tax return. They intentionally don't report it. That could be fraudulent. That could lead to criminal investigation and possibly prison, right, or jail. Unreported income doesn't mean criminal fraud or evasion like we just discussed. A person could legitimately have unreported income and not be anywhere near anything remotely close to criminal fraud or evasion. One other question we get often I wanted to touch upon briefly is civil versus criminal fraud statute of limitations. So as many people know, when it comes to civil fraud, there is no statute of limitations, so that the 3 to 6 year look back period does not apply. IRS could go back 15 years if they want. Do they typically do that? No. Could they? Yes. For criminal fraud, that doesn't apply. There's definitive statutes depending, and they can't go on forever, right? So typically anywhere from 3 to 5 to 6 years, just depending on the particular statute, particular crime. Okay. If a person is out of compliance, there's various programs they can use to get into compliance. If they're willful, they would do VDP, Voluntary Disclosure Program. If they're non-willful, there's various non-willful programs available. Streamlined procedures, delinquency procedures, and even reasonable cause if they qualify. We have a ton of free information available on the main website and sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.